Hello and welcome. You're watching First Take here on News 9. I am Suyash Maheshwari, and over the next half an hour, we'll break down the morning action on Dalal Street. But as always, let's begin with a quick check how the global markets are doing. Now, the US markets, the rally in the US market seems to be slowing down as S&P 500 ended yesterday's session 0.12% higher, whereas the Nasdaq Composite closed 0.07% higher. The 30-share Dow, on the other hand, snapped a 4-day winning streak to end 0.13% lower. European markets also closed lower on Thursday, with the Pan-European Stoxx 600 index closing down 0.7%, with the majority of sectors and all the major bourses ending the session in the negative. Asian markets have also opened on a weaker note this Friday morning on the back of a muted handover from the Wall Street. Hang Seng, as we speak, is down 2%, whereas South Korea was down over 0.7%. Japan is an outlier, it's up marginally. Coming back to the other cues that we have been tracking, the big cues. Crude was a big mover overnight. Brent crude prices slipped by about 4.5% and is currently hovering near the $77.5 a barrel mark. US 10-year Treasury yields lost about 8 basis points overnight and was currently hovering at around 4.45% sort of levels, whereas the dollar index has been flat and is currently sitting at around 104.3 sort of levels. Now, coming back home, Indian markets opened in the red with a first tick for Nifty coming in at 19,647 mark. Now, the market seems to have recovered some of those morning losses, as from what I can understand. Right, as you can see on your screen, by 9:30, Nifty had recovered by about 80-90 points. It's still in the negative, but we have reclaimed that 19,700 mark. Now, Nifty at 9:30 a.m. was down 0.06% at 19,754 sort of levels, whereas Sensex was down 0.14% below the 65,900 mark. Nifty Mid Cap 100 and the Nifty Small Cap 100 and the broader markets in general continue to rally and continue to be the outperformers in this sort of a market. Nifty Mid Cap 100, which by the way scaled a new lifetime high in yesterday's trade, is up 0.12% below the 41,800 mark, which by the way it has reclaimed in yesterday's trade. The small cap index has made a new all-time high in today's trade. The small cap index as of 9:30 a.m. was up 0.39% above the 13,920 mark. The volatility index India VIX has declined by about 0.9% and sits at 11.54 mark. But with that, let's also bring on board Mr. Akshay Bhagwat, Senior Vice President Derivatives Research at JM Financial. Good morning, Akshay. Always a pleasure to have you here.
Good morning, Suresh, and to all the viewers.
Akshay, now yesterday's trade was quite interesting. We opened on a flattish note, went on to make a new high. At least we reclaimed that October swing high of about 19,843, but in the last half an hour to 45 minutes the index declined by about 50-60 basis points. What was the reason for that decline in your opinion? Was it a technical, perhaps we had peaked because we did reclaim that October swing high?
Well, Suyash, the first thing was, we were dealing with a very crucial resistance yesterday, which was 19,850 odd levels. So as you rightly mentioned, we saw this level exactly a month back on 17th of October. And from that levels, we had seen a strong drop in Nifty till the 18,800 odd levels. But when it comes to yesterday's trading, one of the important point was yesterday was the weekly expiry of the Nifty index. And weekly expiries are known to get surprise elements in you always. If you see, I would like just to share that yesterday the 19,800 put in the Nifty weekly expiry flared all the way up from 50 paisa to 60 odd rupees. So that's how the Nifty weekly expiries work. You never know, it's just a bag full of surprises. It's hard on the option writers at times, but very rewarding to the buyers. So I think it was more about the expiry move, because 150, 200 odd point fall from the highs without any news is just because it tests a resistance is out of context. So as far as the day trading goes, yes, that level does have importance. It will play out again for day trading session. So the levels to watch out is how Nifty reacts once again once it tests the 19,800 levels, because you have a lot of call writing bets positioned for the coming weekly expiry at the levels of 19,800 strike. So watch out for 19,800, 19,875. These are stopover resistances. Mind you, these are stopover again, I repeat, because they really have implications as far as day trading or a carry forward trade is concerned. No serious implications, as I understand, in terms of the broader trend. Broadly, Nifty is heading for 20,000 plus. It's just a matter of time. Supports which I see in Nifty, in case you have a small break, as I say, is 19,675 to 19,610. Accumulate on dips in case you get those dips. Otherwise, the broader view continues to be positioned on the buy side. Targets 20,000 plus as we head into the November expiry.
All right, that's a view on Nifty. But Akshay, Bank Nifty, which was, perhaps turning out to be a leader at least in the November series so far. But, we had witnessed signs of exhaustion, at least at higher levels, where the index would give up around 150 to 200 points from the day's high. But in yesterday's trade and in today's trade as well, I mean, there is of course a negative news flow for the banking and the financial pack, of course. But we saw a gap down opening. We have broken down below the 44,000 mark. What are the levels that you are tracking on Bank Nifty?
Well, Bank Nifty actually especially was a laggard. If you look at the last couple of days trade, Nifty was clearly taking the lead, and probably the market knew the news which majority of the traders didn't. That was the news which came out today about the RBI increasing the risk weights in the unsecured retail loans to NBFCs. This news is playing out, as I understand, even in the derivative space. If you would look at the way the options data is positioned, 44,000 has serious call writing bets. So that's a very important resistance level. As a trader, you need to keep a watch on how the call writers are positioned. So 44,000, 44,100 roughly works out to be a very strong resistance for the bank index. These levels are going to play out today. It's a gap down opening, and as I understand, Bank Nifty is trying to recover its lost ground, but I do not see any serious recovery as far as day trading goes. If you are looking at the supports, well, we are below the 44,000 support as of now. So the first point for any gains, if Bank Nifty has to post, would be to regain its lost glory. That's it has to sustain about 44,000. That's the first point I would be interested in if Bank Nifty manages to break. My view is that it is going to be a choppy session. It's going to be trade. It's going to trade on slightly a SAR note as far as day trading goes. So the supports of 43,800 would come into play maybe today or maybe on Monday. So you have to work with the levels of 43,800, 825 and 44,000. That's for short-term trading. I would recommend let Bank Nifty sustain above 44,000. Then you can search for buying trades in the bank index.
Now, I mean, there is mutedness in the headliners and the banking pack, but this broader markets, Akshay, have been showing resilience, at least in the face of volatility. First, it was a small cap index that was making new highs on a pretty much on a regular basis, but the mid cap index has also made a lifetime high in yesterday's trade. I think it's also building onto those gains in today's trade as well. Between the two, the small caps and the mid caps, on the price charts, what would you prefer?
Well, I would prefer the mid-cap space. Well, the charts for both of them have a very strange story to say because the kind of run which we have seen especially since the beginning of November, it's defined all charting logic in the sense that it's be a one-way rally. There are no, not even a slight correction which I see in the mid-cap space. Right from, if you were to look at the mid-cap 100 index from 38,000 to 41,795 as it currently trades, it's been a one-way rally. No stopping this index. So clearly the momentum flow is intact. The money flow, which I understand, is strongly positioned in the mid-cap space. And if I were to select one of the index among these two, I would prefer the mid-cap 100 index, considering the fact that this index is more reliable in terms of the number of the activity or the shares which are traded and the stocks which are form a part of this index. So stay with the mid cap Nifty 100 index. Still further gains possible in this. Although overbought, the momentum is intact. Possibly 43,000 is where this index is heading for.
Now, another sector that is doing fairly well is the IT pack. In the last 3 days alone, you know, Nifty IT is up around 5.5 to 5.8% or so. And even in this rally, the bellwethers are now participating. If you look at the returns of TCS, Infosys, all of them I think are even Wipro, which by the way I remember you recommending, and you're giving a target price of about 397, which by the way it has also met. So between all these bellwether stocks, I'm talking about the top 5, top 6 IT companies, what would be your preferred pick at this point in time?
Well, firstly, the IT index, unfortunately, till now, yesterday, it was more of a laggard. The Nifty picked up strongly, rebounded well, but IT was somewhere, left behind in this entire scheme of things. And yesterday, it came back really with a strong vengeance, led by TCS, especially the buyback news, which, is one kind of a booster for the entire pack. So here, if you were to look at stocks which would do well, firstly, I would stay with the stocks which are showing strength, and that's TCS, which comes to my name first. 3514 is where it trades. A very strong chart setup, backed by news, backed by the derivatives data, and I would say 36 is where the stock is. 3600 is where the stock is heading for within this November expiry itself. 3440 is the base. So I would be buying TCS at this given rate. The second stock, Wipro, again, is one on my watch list, because Wipro has a very strong base at 380.85. The stock has come out of its base. The derivatives data hints long unwinding, and that's a positive sign for the stock to further rally up to 410. So that's my target for Wipro. And lastly, HCL Tech here from the big IT names which you mentioned about. This also has a very strong technical price structure, a possible rounding bottom breakout, which we noted at 1300 yesterday, which gives you a target of 1375 on the upside. So these are the three top bets on the IT space: TCS, HCL Tech, and Wipro, which I would be looking for in the short term to medium term time frame.
Akshay, also wanted to get your view on the pharma pack. Now, I think Nifty Pharma has made an all-time high today. The index, at least since August, has been struggling near that 15,700 sort of levels. On an intra-day basis, we would claim those levels, but we could not close above those levels. Finally, we have opened significantly above that and made a new all-time high. And even if you look at the rally in some of these pharma stocks in November, I think the pharma index on the whole is up around 7% in November alone. What's your take on the pharma pack? Can we expect the rally to continue? And if you could give us one or two stocks that perhaps one can look at in the pharma pack.
See, in the pharma space, one thing is the November has been excellent in terms of the rally which this index has posted from roughly around 14,500 to 15,730, where this index trades. It's been a very strong rally, but a slight concern for me, a caution note for me if you are trading, because, we are almost near the all-time highs. In fact, we have just managed to get past the all-time high levels on the pharma index. We saw these levels way back in the month of August. So these levels are revisited, and there is a good chance that there might be some profit booking. So you need to take your profits off the table, especially if you are a trader. So booking profits is recommended if you have a short-term vision in the market or a trading perspective. If you are positioned for a medium to long term, then yes, definitely this index has more upside to go in the days to come. Now, the couple of stocks here which I like based on the technical setup here. One is Glenmark Pharma here and Aurobindo Pharma. If I were to look at the chart structure, Glenmark is in a range. It's time and again showing strong indications of bump up from the bottom or the range bottom, which I mentioned is seeing long additions here. So I would recommend go for buying in Glenmark Pharma. The target price I'm working with is around 815 to 827 with a stop of 737. And Aurobindo Pharma, which again has been an outperformer in the November series in the pharma pack. Slight consolidation in last couple of days, but I believe the momentum will regain. Look to buy or for a target of 1010. That's the higher target I look for, and with a stop of 957. So these are the two pharma bets I would recommend in the pharma space.
Now, Akshay, before we let you go, any 2-3 stocks, or trading ideas that you could give for our viewers for the very short term?
Well, for the very short term, one is healthcare space. Again, with pharma, this is going hand in hand in the last few trading sessions. So Metropolis Healthcare is one stock already up by about 1% today in the day trading session. And I believe the chart setup is extremely healthy for if you are a trader or even positioned for medium term. Look to buy Metropolis. The targets are around 1647 to 1662. The stop loss will be 1570 on this trade. That's the first trade you can look at. If you are looking from the IT space, then Dixon Technology is one stock which I would like to bring to your notice. Again, from the pharma space, it is picking up momentum right now, as I see around 1% up almost. Yesterday was a very strong day for Dixon Technologies. The target area I'm working for in Dixon Technologies is around roughly around 5790 to 5840, stop loss 5230. And if you're looking for short candidates, again, keep small targets if you are shorting because it's a buyer's market. But a banking name which comes to my mind, Axis Bank, already a gap down. So, the comfort is not there. Let it rebound a bit. Let it get back somewhere around 1020 odd levels. Then you can look to short Axis Bank. A slight weak chart structure here. News flow is negative. So probably around 990 odd levels is where you can target in Axis Bank on the short side.
All right, that's the view coming in from Akshay Bhagwat of JM Financial. Sir, always a pleasure talking to you. Appreciate you joining us here on First Take.
Thank you.
But with that, let's move on and look at how the markets are doing. If we can pull up that chart of morning mood check that we have for the 10 a.m. show, because from what I see, Nifty has turned positive. In fact, it is nearing that 19,800 mark, just 12 points shy of that, and this is as of 10 a.m. Nifty was up 0.12%, sitting at 19,788 mark. Sensex, on the other hand, is flattish at just under the 66,000, around 23 points shy of it. The mid cap index has reclaimed the 41,800 mark, whereas the small cap index continues to build on the early morning gains. It's up over 0.5% and is nearing the 13,950 mark. Volatility has picked up. India VIX, which was, by the way, in the negative in the morning, down by about 1%, at 10 a.m. has spiked to 3.41% and it is now above the 12 mark. But with that, let's also bring on board Mr. Amar Deo Singh, Senior Vice President of Research at Angel One. Hello, sir. Very good morning to you. Thank you for joining us here on First Take. I want to begin with the big one. RBI yesterday had increased risk weights on unsecured loans for both banks and NBFCs. I think what was more surprising for the street was the fact that they have increased risk weights for the lending by banks to NBFCs as well. Now, I think even if we look at how the banking pack is doing this morning, it opened gap down. Nifty bank is below 44,000 mark. So all in all, a very big negative news flow for the banking pack, isn't it?
Yeah, I would say that markets will look at how this actually plays out, because this is more from the unsecured lending perspective for the NBFC. So that would have an impact, and that's what we are seeing. Even if you look at the benchmark Nifty, it did open with a down gap, but there was a pullback which has happened. And if we look at Bank Nifty anyways wasn't as strong, because if we go back and look at the charts for quite many days, so Nifty is trading at its recent highs, means the highs that it had made last week and currently also, and this week also. But Bank Nifty has been trading over the last few trading sessions. So that clearly tells me that there is some concern, and also what it tells me is that it would be more stock specific. There would be some stocks that might be impacted, but how much is the impact going to be? That's one thing that we'll have to look out for. Because if you look in the banking space today, we see that there's some correction in IDFC, with some then Axis, SBI, and all that. We're seeing some sort of minor correction, but overall there's not much of a reaction, because if you look at IndusInd, Kotak, so they are there in green, and some of the banks are marginally in the red. So we'll have to watch out as to how this plays out for these banks, and primarily for the NBFCs on the non-secured part. As far as Bank Nifty is concerned, I would say Bank Nifty it has been, I think, taking this into stride, because that's what being reflected on the charts per se. And on the upside, the recent highs that Bank Nifty had made, so somewhere around 44,400. So that was made on 15th November. So that's a zone of resistance for Bank Nifty on the upside. So that's a level to watch out for. Once it takes that out, then we can say that more of the news flows and all that, which has really come off recently, that's more or less been factored.
Now, RBI's directive aside, between the PSU banking space and the private banking space, at this point in time, what do you prefer? Because we are seeing once again a pickup in the private banking pack, and you along with other experts have indicated that valuations are looking perhaps attractive.
Yeah, I would say if you look at the private banking space, then in that case, we are seeing Axis is more or less now consolidating. So there's a loss of a trend there. And if I look at other private sector banks, so ICI, HDFC Bank, what we are seeing is that it's more or less now trying to form a bottom. So it's not yet formed a bottom. So that's a level for HDFC, somewhere around, I would say, any correction towards, because currently it's around 1500 odd levels. So any further correction in HDFC, that could be a buying opportunity. So maybe a 2-3% correction in HDFC can be looked as an opportunity. Apart from that, ICICI is now seeming to have formed a bottom. So because it has got very strong support coming around the 900 levels, currently it's around 934 odd levels. It has been consolidating for quite some time. So once it starts, ICICI starts sustaining above the 950 mark, then we could expect an upside towards the 1000 mark. So this is one on the private sector that we can look at. Apart from that, IDFC, what we are seeing, IDFC First Bank, we saw a significant rally. Now it's in a more or less a consolidation phase. So we could witness some choppy trading sessions here between, I would say, 90, 92 on the upside and 80 on the downside. So any correction in the stock towards 80 odd levels, 78, 80 odd levels could be a good buying opportunity from a short-term perspective as well.
Mr. Deo, any view on Yes Bank? I mean, the stock has rallied by about 30% in November alone. I think one of the reasons why it rallied was that, it has received 120 crore from the NPA portfolio of JC Flower. But I mean, the kind of exuberance that we are seeing, do you expect the stock to perhaps break out of those shackles of around 20 to 24 rupees that we have seen in the last 2-3 years?
See, if you look at Yes Bank, actually, we don't track Yes Bank either from a fundamental or a technical perspective. But since you asked the question, I'll answer that. So what we see in Yes Bank is that you rightly said that 20, because if you go back in time, so somewhere in December 22, it had made a high of 24.75. And from there, it had corrected all the way to 14, and it was trading around 14 odd levels, and now it's back at 20. So if you ask me purely from a technical perspective, the bank seems to have formed a very strong bottom on the downside. And also what we are seeing is the last few couple of weeks, I would say 2 weeks to be precise, there's an increase in volumes as well. So that reflects that there is some definite buying interest which is coming into the stock. But as I said earlier, 24, 25, that's going to be a level for stiff resistance for the stock. So one needs to be, before trading in the stock, one needs to be slightly clear as to there could be risks associated in terms of volatility, because it could be more of news driven as well. So that's one thing one needs to keep into account. But as I said, technically 24, 25 is a zone of resistance for the stock.
Now, sir, another sector, at least that is buzzing, is the IT pack. Phenomenal returns in the last 2-3 days. I think it's up almost 5.5 to 6% or so. Even the bellwethers are now participating. Can you, we have been talking about sector rotation. Can the IT pack take the leadership role perhaps in the near term?
So if we look at the Nifty IT index, because that will give us a good clue and idea. So if we look at the Nifty IT, so currently it's around 32,300 odd levels. And we did see that this week Nifty IT has gained around almost 4.5%. However, what we see on the long-term charts, if I look at the monthly charts, so somewhere Nifty IT has got very strong resistance. So coming around the current level, so somewhere around the exact level of resistance would be around 32,800, 33,000 levels. And so that's a level to watch out for. Yeah, overall, short-term perspective, intermediate-term perspective, we did see a bounce back. So whether this bounce back is here to stay, we'll have to watch out if these levels are taken out, and that would signify that the trend has changed from a long-term perspective as well. Otherwise, what we could say that it could be more of some short-term rally which we are witnessing till the time we don't see Nifty IT sustaining above the 33,000 levels. Talking about specific stocks, if you ask me in the Nifty, in the IT space, yeah, some of the stocks have done phenomenally well. If we look at, for example, HCL Technologies, so this stock has broken out of a consolidation zone. Earlier, it was unable to breach the 1300 mark. Countries trading above that level. It's strong on the long-term charts. So there is a possibility that the stock could rally further towards 1350, because that's going to be a level of resistance for the stock. If I look at some other stocks in the IT space, so from that perspective, PCS, we have seen some good pullback, which is happening in the stock currently on 3,500 levels. So this has always been a slow mover, and what we've seen is that anywhere between, I've spoken earlier also, that anywhere between 3,300, 3,350, that's a very good level or zone of support for TCS. So on the upside, there's always a 8 to 10% opportunity on TCS from a short-term perspective. So now what we are seeing, the stock trading above the 3,500 level, so it has a potential to rally. Once it starts sustaining on the 3,500 level, we could see the stock rally towards the 3,600 level. So this is again one stock which from the large pack, which seems to be good. And the last one I would like to talk about is Coforge. This is one stock from the IT space which was in for consolidation. It did correct from its recent highs. So again, it's meeting with a double top. So if I look on the chart, so somewhere we are seeing that Coforge had made a high of 57.62 in September of this year, and again today's high is 57.50 roughly. So that tells me that that's a level to watch out for. Volumes, how the volumes play out today, and whether it's able to sustain above the 57.50 levels, that would decide whether the stock is in for a significant rally or the stock would witness profit booking at the levels.
All right. And before we let you go, sir, a quick word on foreign institutional investors. In the last couple of sessions, they have turned net buyers, and they have bought equities nearly worth 1,500 crores. Is this the pivot that we were hoping for, and can FII buying perhaps drive the markets to a new record high from here on?
Yeah, I would say, see, what happens is that what we've seen is that FIIs had been continuously selling over the last many months. So in spite of that, or despite that, the markets did correct, but they bounced back. So that shows the resilience of the Indian economy and the markets in general. Also, what we saw was the DIIs have been very active, and also we see the retail participation there in the form of SIP and others. So yes, if the FIIs, it's too early to say, but if this trend continues, because the trend will have to look for at least a week to a fortnight, the regular trend. If that continues to be positive, then definitely that would add on more to the support for the market, because the inflows would increase. So that's one. Secondly, we'll have to watch out for, because FIIs, if you look at, they have a clear-cut mandate where to invest. So they wouldn't be investing in very small caps, but I would say more on large caps and mid cap sort of sector. So yeah, if that happens, then we could see a significant up move as well, provided we see a big inflow on a consistent basis coming from the FIIs.
All right, that's Amardev Singh for you. Sir, always a pleasure talking to you. Thank you for joining us here on First Take.
Thank you for having me.
Let's also look at how the markets are doing, because Nifty has moved in the green, is what I'm made to believe. As of 10:10 a.m., we are on a flattish note, slipping in and out of that green zone. Nifty, as we speak, is up 0.11%. It did scale that 19,800 mark, but we have seen some bit of a correction from there on. Sensex, on the other hand, is struggling with the 66,000 mark. It's just about 7 points shy of it and is at the day's high. The mid cap 100 index is holding on to the gains but has slipped below the 41,800 mark, and the small cap index has also seen a correction of about 50 points or so, and as of 10:10 a.m. it was sitting at 13,937 mark. Volatility, India VIX, the volatility index is up 2.7%, and this is as of 10:10 a.m. this morning. It's sitting just below the 12 mark. But with that, we have completely run out of time on this edition of First Take. Keep watching News 9.